Hello.
Hey.
Oh, good. I was wondering if somebody can hear me.
I can hear you.
Okay, cool.
We're good.
Yeah, that works. Where are you sitting? Are you in Zambia, US?
US, yeah.
Zambia, US?
Yeah. One of those two.
One of those two.
Yeah. What about you?
I'm in Lagos.
Got it.
Yeah. And what company are you with?
Compound. We're a venture fund in New York.
Oh, cool. Assuming early stage.
Yeah, seed, pre-seed stage.
Okay, cool. Interesting.
Yeah. What about you?
Microtraction. We are pre-seed. We sit here in Nigeria. Started in Nigeria, but now we're expanding out to other countries.
Cool.
Yeah, and we do just tech-enabled. Yeah. Yeah. How is New York with COVID? They opened up, but it looks like everyone is waiting for the close to happen again, right?
Yeah, it's not great. It's a very strong bifurcation, as all the US is, in those that are taking it seriously versus not, I think.
Yeah. I saw a video and I was just nobody was wearing masks. And I was come on. It's not there is still such a thing as COVID out there. So
especially in the US. Yeah.
Yeah. So that's why we're seeing.
Hello.
Hi, Kas.
Hey.
How are you?
How are you doing? How's everyone today?
We're good. Thanks for taking on this moderator role last minute, because
no worries.
Somebody had to do it.
Someone's got to do it, right?
Yeah.
Yeah. No, I'm super excited. I mean, it's a pretty cool discussion. I've got a few good questions, so we'll see how it goes.
Yeah.
Cool.
How are you guys?
Being a moderator is the hardest part of being on a panel, so I'm glad you're doing it.
Yeah, I didn't realize they put me as moderator until this morning, and I was like, guys, that's not what we discussed. So
yeah, I was easy. I'm easy going.
Yeah.
My name's Kas. Anyway, I've never met you guys. Working out of Zambia in the VC space here, doing some pretty cool stuff. Trying to bridge the gap between a lot of that foreign investment into Africa. And yeah, it's interesting to see how this discussion goes, and we've got a pretty cool panel, so I think the conversation will be flowing.
Yeah, should be fine.
Yeah, I'm excited to learn. I feel like there's a lot I don't know about early stage investing in Africa, so I feel like I'm going to have a lot to listen to.
Okay, cool. Yeah, no, I think what I'll do, I've got a little introduction. I'll introduce everyone when the time's ready, and then we'll just keep it going.
Okay.
And what do you guys do? I mean, obviously I've done a bit of research, but
yeah, sure. I'll let Michael start.
Oh, okay. We have a venture fund in New York called Compound. Super early seed, pre-seed stage investing, been on since 2009. And often most of our investments bend much more on the emerging technology side. So machine learning, robotics, healthcare, all the way to computational biology stuff. We call it post-science project.
Interesting.
Right.
So you guys do more deep tech, right, than anything else?
Yeah, we definitely do some consumer stuff still, some more traditional enterprise stuff still. And I think in general, invest relatively geographically agnostically.
Cool.
Yeah. JJ, what's up, bro?
Hey guys, it's Walter.
Hi.
Hey.
How are you doing?
I'm good. My computer is having issues, so I had to just log in on my phone. So if it looks funny, just let me know. But hopefully it still works.
No problem. You're looking fly.
Thank you. Good to meet all of you. How's everyone doing?
Good.
We're good. Yeah. Walter, I feel like you look different than what I remember you looking like.
Really? How's that? Maybe I look a lot more formal.
I don't even know. I feel like this is not what I envisioned anymore. We've met once, so I'm like, wow, shoot. That's interesting. I wouldn't recognize you.
I'm sure when we met in Nigeria, I probably had not gotten a haircut in probably 6 months. I was probably wearing shorts and flip flops. You know, it's my usual uniform. So
that's the only way, man.
You dressed up for this occasion.
Yeah, I was talking to my team, and they're like, "Look, you can't go on there looking like shit. You have to represent us." And so I had to step it up.
I'm pretty sure we're the grand finale tonight as well.
Yeah, it's pretty late, so it's interesting. It looks like there's still about 100 people, I think, in the conference. So
yeah, so I'm excited.
Can you guys see me? Okay.
Yeah.
Okay. Cool.
Njavwa, how you doing?
Good. Thank you. How are you, Kas?
So yeah, I don't know if you guys know, but I think I'm mediating today. So when we're ready, probably in about 3 minutes, I'll just do like a short introduction, introduce the panel, and then we'll just keep it going from there. And the first questions, I'll just leave it to whoever wants to start and stuff. I think we've still got 2 minutes before technically allowed to start. So yeah, let's just hang around till then.
And sorry, it's in Njavwa. I want to make sure I'm pronouncing everyone's name right. And so it's in Njavwa.
Yeah. Njavwa. Yeah.
Okay. Thank you.
You've got a Njavwa based in Lusaka. Spent a lot of time together.
Yeah. Yes. And sorry, it's Chidinma.
It's Chidinma, but most people don't call me Chid. It's
Chid?
Yeah, Chid.
Cool.
Yeah.
Thank you.
You're welcome.
And Kas and Walter, I think I got that.
Chidinma, it's a pleasure to meet you. Walter, it's a pleasure to meet you.
Nice to meet you.
Walter should be pretty easy.
Yeah.
Walter, how do you pronounce your surname?
Baddoo,
cool.
Yeah.
Where?
Like Erica Baddoo, except I'm not as cool. So.
Yeah, cool, good stuff. So yeah.
And where is everyone? You're more cultured.
I love this platform. It's super interesting.
It's too convoluted for my taste. I don't know.
I just couldn't get my camera working, but outside of that, I thought it was pretty good.
I'm like, I don't even know. I don't know how they're managing this platform. I've been on it once and I was just like, I had such a tough time. So that's why, like, the first thing I did this morning was like try and log on to figure it out. Could they have done
this on Zoom?
Yeah.
This feature? Interesting.
Did you get these views though?
The what?
Did you get like 100 people on one Zoom or more?
Yeah, you can. Yes. I believe so. There's no limit.
Oh, really?
Oh, I'm sure whatever limit they had, they've probably blown it wide open at this point.
Yeah. Right. Get that stuff going on.
Exactly.
Okay, cool. Okay, I think we can start. So let me kickstart with the introduction. So, ladies and gentlemen, thank you for attending the first Africa Renaissance Conference. Welcome to the Early Stage Investing Africa versus US discussion. My name is Kas Shirley, Managing Director of Amana Capital. We're an early stage seed fund looking at pre-revenue Zambian tech concepts with a highly disruptive nature. We also offer advisory services for more established SMEs and have been actively bridging the gap between foreign investment and Zambian-based SMEs for about 2 years. Today, I'm joined with a fantastic panel of investors, including Njavwa Mulwanda, founder and managing partner of Zenga in Lusaka, Zambia, Chidinma Iwueke, partner at Microtraction, based in Lagos, Nigeria, Michael Dempsey, partner at Compound in New York, and Walter Baddoo, partner at 4DX Ventures, also based out of New York. So today's discussion revolves around the early stage investment environment in two relatively contrasting landscapes. One is highly established market, birthing some of the world's most scalable and successful businesses over the last 20 years. And the other has seen a meteoric rise in traction and prospect over the last 20 years. So the initial discussion today therefore revolves around the differences and the opportunities and how the venture capitalist industry can learn from the successes and also avoid the mistakes from both demographics. So I therefore start the discussion asking these questions. In what ways is the early stage investing space in Africa different? What role has early stage investing played in the growth and eventual domination of technology in the US economy? And what are the lessons for Africa? So without further ado, I'll open up the discussion to the panel. Whoever wants to go first, feel free. We're easy here, and look forward to all of your thoughts in the comment section. Thanks.
So I can kick off. I think it's Walter. I think everyone can see me, but hello everybody. So I mean, look, I think for me, in thinking about this question, the first thing I think about is sort of how do you define an ecosystem, right? So we talk about the technology space in both the US and Africa. How do we think about an ecosystem, and sort of how do we break down the different components that makes it easy to really sort of compare the two ecosystems, right? And so when I think about how to analyze a technology ecosystem, you know, the sort of pieces that I think about are, one, sort of the existence of a large developer community. Ultimately, this is technology, and so we need the talent to actually build things, right? And you need the sort of the folks that are going to provide a safe space for a lot of these developers to be able to build whatever they want to build. And so, you know, you need some accelerators, some incubators. You've got sort of Y Combinator in the US. You have the likes of Microtraction and what Chidinma does in Lagos, in Africa. And then you have to have the startups, right? The reality is you need, you know, interesting, disruptive, to use your words, Kas, startups that are going after very interesting opportunities. You need the investors, right? The VCs who are bringing the capital and some of the mind share to the table. And then you also need some established large tech companies, right? Because those are the folks that are going to be grooming that next generation of talent that's going to be coming, you know, into the tech ecosystem to build interesting companies. By every single measure, if we look at all these different pieces, there is a dramatic difference, right, in where Africa is vis-a-vis the US, right? And so if you think about the developer community, the US has, you know, one of the largest developer communities in the world by bar none, right? And they've been at the technology game for a very, very long time. If you think about the accelerators, you know, Y Combinator has deployed billions of dollars to some of the most marquee technology companies over the last 10 to 20 years, you know, over the last 10 years. But there are other accelerators that go even further back that have been funding companies for an even longer time. And you know, some of them have come and gone. And if you look at Africa, you know, you have the likes of Microtraction doing very interesting things. There are some other incubators as well, CC Hub and Bosun and his team doing some very interesting work, but it's still, you know, early days. We have, you know, over 400 tech hubs and tech incubators and accelerators on the continent. But if you take the aggregate capital that a lot of these folks are deploying to the new tech companies or startups, you know, obviously it's still pretty nascent in Africa relative to the US. And if we think about, you know, the investor piece, I mean, you know, Africa, by whatever measure you use, last year in 2019, you know, there was about 1.5 billion to 2 billion of capital that came into the technology ecosystem. If you look at the US, we're looking at about $138 billion of money that went into the technology ecosystem. That is about a 70x difference in scale. And so we're talking, you know, night and day here in terms of the amount of capital that is being deployed in these ecosystems. And then the last piece is the established large tech companies. I mean, you know, we've got the Ndellas of the world doing their thing in Africa, you know, depending on what day it is, obviously Jumia as well, you know, doing their thing, and a bunch of other companies that are coming along. But the reality is, we don't have those large tech companies yet. I firmly believe they're coming. That's why I'm doing what I'm doing. But if you look at the US, right, you're looking at an economy. If we take the S&P 500 as a proxy for sort of the health of the US economy, the top 500 companies in the country, on public companies in the country. In 1990, technology accounted for 5% of the index. And today it accounts for about 25%. You're talking about a $27 trillion index. And so there's about 7 trillion of that is represented by technology companies. That is a dramatic move in the last 30 years. And if you look at the top 5 companies, Apple, Amazon, Facebook, Google, Microsoft, they account for about 17% of that index, right? So you're talking about $4.5 trillion accounted for by just 5 companies. And so I think overall, it's pretty clear that these ecosystems are at very different points. However, there's reason to obviously be very bullish, because if we play the Africa story 20, 30 years out, my expectation is, we're going to have companies that are also going to reach some semblance of scale. 500, I think McKinsey had a report recently, a couple of years ago, that said about 500 companies on the continent make $1 billion or more revenue. My belief and our firm belief is over the next 10, 20 years, the next 500 companies that come along that get to that kind of scale are going to be technology companies. And so that's kind of how we think about it. Sorry for the long-winded answer.
No, perfect answer. Who wants to go next?
Yeah, I guess I'll go next and kind of drill down into what Walter said. So he mentioned quite a few things, and one of the things that he did mention was also the startups and how when you look at the ecosystem, right, everything feeds into the other, right? So when we're thinking about, when we drill down into the startups, and let's say you try to do that comparison to maybe the comparable startups in the US, you start to see that we have within Africa, there just seems to be a lot more variables that we have to deal with. And most of those variables are really kind of hinges on the operation, like the operating environment and the economic development of Africa, right? And I'm going to stop saying Africa, because Africa is big. So I'm going to focus on the market that I know best, which is Nigeria. So when you start looking at that the operating environment, it's extremely tough, right? It's tougher than the operating environment is now for the US. And I'm going to use US as just because it's what I also know that market a little bit. So when you have our founders, and a lot of what they're dealing with is just lack of infrastructure, things around electricity and data being expensive, and then you kind of layer onto that this slow economic development. And when we're talking about economic development, I'm not talking about economic growth, right? I'm talking about economic development, which is more qualitative. When you think about it, you're thinking more around you're providing kind of the citizens here, kind of the basic resources, the services, things like healthcare, schooling. So you're looking at some of this human development index kind of stuff, life expectancy, literacy, education, all these things that end up actually kind of help. It's what ends up helping build the ecosystem or keep the ecosystem a little bit more muted. So when you layer that slow economic development on top of the operating environment being tough, then you start to see that our startups or our founders have really challenges that are very, I don't think they're the typical challenges that the current US founders face. Walter mentioned one of them, right? Talent becomes difficult. It's not that we don't have the talent here in Africa. We actually do. It's just that we haven't trained them. We haven't put the resources behind some of the individuals here to help them kind of become fully self-actualized and also become a contributing member, trained member of the society. So it becomes difficult for people that are founding companies to find the right talent to help them build these companies up. Access to capital becomes. So this is one of the gaps that we identified a couple of two and a half years ago when we started Microtraction, is because people are living on $2 a day, right? And they don't have any excess capital or any kind of what you call like a safety net to allow them to actually set aside a little bit of capital to help them prove out a concept or an entrepreneurial idea. And the great thing about Nigeria specifically is that our population is just highly entrepreneurial. So if we had any type of like any kind of excess cash or ancillary cash flying around, I think we would see a spur of kind of more startups coming up. But we don't see that because the economic development hinders the amount of capital that we have in order to kind of push some of these startups to see that those startups kind of see the light of day. So when you add that up and then you start talking about regulatory environment and all these things, you kind of see that there's just a clear difference when it comes to the operating environment and some of the issues that our founders are dealing with. That is quite different from what the founders in the US are dealing with. And then it also kind of ties into how do you support our founders? Like, can you just put money into these companies and just let it go? And that the answer is no, you just can't, right? Because there's too many obstacles in the way. So if you put money into a company and you don't provide any kind of support or advice, it's likely that you're not going to see that money, show multiples. You need to somehow provide some sort of support to help navigate this environment. So there's some of that going on. So I'll leave it there and I'll open it up for someone else to speak.
Yeah, I mean, my main view on this, you guys both have given incredibly in-depth answers, and I don't have nearly the experience on the Africa side, but I do think it's a core infrastructure thing, and I think that infrastructure is across kind of everything you're talking about related to both the founder infrastructure, the country level infrastructure, and then the capital stack infrastructure. From how do you build both, how do you begin to seed companies, and how do you help companies scale, and like the pieces in place on both of those in the US are incredibly deep and only growing at a faster and faster rate, especially as there seems to be a broader macro view that like this is, growth technology investing is where you want to deploy more and more capital if you're any sort of asset allocator in the United States. And I think that, it's probably a matter of time, especially based off of the scale when you're talking about just Africa as a whole. And I know you're kind of thinking about how you segment it a little differently, but I think it's a similar thing we saw probably in Asia about a decade ago too, of just like once you have a lot of intentional infrastructure that is making an intentional effort to do something, you'll start to see scale happen, and it takes time, but it's not clear to me why all of these ecosystems aren't going to be growing at a rate that is probably outpaces or grows at a similar scale as the US.
No, great, fantastic. Oh, sorry, Njavwa.
Yeah, thanks, Kas. And so I guess just for context in terms of where I'm coming from. So Njavwa, Mulwanda, I'm a Pan-Africanist, I'm a globalist like most of you, and I'm the managing partner at Zenga, as Kas mentioned. And it's apt that we're following a panel on building cities and infrastructure. And let's be clear that the fourth industrial revolution is underway, and it's Africa's to look inward for value addition, for our resources to add value, and to add value to those resources, we need technology and we need investment from growth equity. The growth that we've talked about, that Chidi and Walter and Michael have talked about, is only expected to accelerate further, right? And we're sitting here, I think, all congratulating Elon Musk on the Model 3 Tesla outselling all its direct competitors combined in terms of the C-Class, the 3 Series, the A4, the Lexus IS. If you add all those sales up over the last couple of years, the Model 3, the much delayed Model 3, outsells them. The Model 3 obviously uses a battery that includes cobalt. Cobalt is a vital material in those batteries. It's a vital material in storage for energy. Energy was mentioned earlier. I had to refresh my screen because I lost the video, partly because of internet bandwidth challenges. But therein also lies the opportunity. So if I then bring it to the first question, Kas, you asked about one of the ways that early stage investing is different in Africa from the US. And I've spent about half my life in the US, and my three co-founders who are on the conference here as well are still based in the US. But 2 years ago, moved back to Zambia. And I noticed a few key differences. I'll start on the positive side, because I think when we're talking about Africa and investing, there's a lot of initial negative that's drawn out. But in that, I equally see opportunity for everyone in this conference. The first is that private equity, which venture capital is part of private equity, it's in its infancy. So policy was referred to earlier. We can design the policy we want to design. There's also significant regional expansion opportunities. And Chidinma, sorry, apologies. I will take the Africa view a bit, and I love your micro Nigeria view, which we'll draw on here as we chat. But if I just think about what's going on in terms of the African Continental Free Trade Agreement, which pre-COVID was supposed to be implemented next month, that creates a seminal opportunity for what tends to be the biggest hindrance for startups or companies in my neck of the woods in Zambia, which is the Zambian economy is too small, or the Tanzanian economy, or the Malawian or Zimbabwean economy is too small. But if we think more broadly about the 1.4 billion people that live on our continent today, and I heard on the last panel that number is going to grow quite exponentially just by 2050 in our lifetimes, that number would double. So there's going to be an imbalance in terms of the supply and demand of capital, and that's a difference, I guess, both a positive and a negative. In the US, there's no shortage of capital, and frankly, there's no shortage of viable investment-ready businesses. The challenge, I think, from an African perspective is how do we look at the companies that are investable? And governance was also mentioned earlier. What does it mean to have good governance? And what does it mean to have an investable company from the lens of the investor? And the lens of the investor is important here because for some reason in Africa, an investor will look at an early stage company and ask about cash flows and ask you about discounted cash flow analysis. The reality is I have no idea what my DCF is if I'm a tech startup or I'm just starting out on an infrastructure project, right? Versus in the US, the focus is on revenue growth and KPIs. So there tends to be a lot more focus on cash flows here initially, which cash flows are important, absolutely. But the initial focus should be on development, right? And supporting the business grow. And there's nowhere near enough local capital backing local African teams from a financing perspective. And that lack of scale tends to draw kind of a traditional venture capital private equity view on Africa, which is the 2 and 20 or 3 and 35 if you're lucky, in terms of charging a fixed fee of assets under management and charging a fixed percentage of the carry on the fund. And that's a development opportunity. And that's something we need to, frankly, turn around on the African side. But I see differences that are both positive and developmental opportunities, or negative, to use a slightly more direct phrase. That's my view on the first question, Kas. Thanks.
Okay, awesome. Yeah, and I think just kind of alluding to all of your points there, fundamentally, just the fact that we're talking about the US and Africa in the same light just shows that we are quite behind. And obviously, as Walter alluded to the point, the capital influx into the whole continent was way behind America. I think looking at pioneering VCs going forward now, I think that kind of ecosystem that we've almost discussed as well needs to be implemented. And I think it more relies on having more of a continental approach rather than a regional approach or a country approach as VCs. So that kind of goes to my next point, saying, what are your philosophies on that perspective? Because fundamentally, from our kind of research that we've been looking at, we've started to realize that a lot of the big African issues are all can be solved in most geographies, right? And I thought that can actually increase deal flow for VC as well if they have different positions across the whole continent. But ultimately, that's actually transitioning a lot of capital across the continent, which can actually have an immediate effect on a lot of different industries. So my point and my question to you guys is asking, as VCs, and Michael will get to the American side in a bit, but as African VCs, do you believe in continental outreach, or do you still believe in geographic positions?
So maybe I'll take a crack at it first. I mean, I think for us, when we think about investing on the continent, we take a firm sort of Pan-African view, right? And so it's really the continental view. However, one of the things that we care a lot about, and we spend a lot of time trying to understand, are sort of the microstructures of the entire market, right? So what that means is, Africa is a very, very large continent, right? There's a myriad of cultures, a myriad of countries. You've got sort of some protectionist countries, some that are not, some countries that have different types of infrastructural standards relative to others. So, you have a pretty vast and different development standard across the continent. And so that is one piece that we really pay attention to in our investing. I think that, a lot of it also comes down to the type of company you're looking at. I think ultimately, at high level, you want to be in regions or in areas where there are large populations, right? Hopefully you have some good GDP per capita going for you, where people can actually spend money, to Chidinma's point about folks having excess cash, right? And so whatever services and products are being built, ultimately, the nature of companies in Africa in technology is the economic value from a lot of these companies does not come from selling technology, right? It actually comes from traditional industries. That's why we call it technology enabled. There are very, very few companies that are truly selling software or truly going after those types of opportunities. And so I think, when you're looking at a company, it is important to look at the ecosystem where they're operating and understand what the path to scale is for that company in very specific terms. I'll give you an example. If you're looking at a food delivery business, okay, or you're looking at a grocery delivery business, those businesses are predicated on retention, recurrence, et cetera, right? And so you could be in an area that maybe demographically isn't as large as the next economy. However, given the dynamics of the company, you're making your money on sort of frequency and penetration in the local market. You could realistically have a sizable business, even in an economy or sort of in a country where the demographics may not look as such, right? Whereas if you're doing something like payments, for example, where folks are having to buy things from different places on the continent, that is a business that takes much more of a veneer approach, and so. A business like that will necessarily, in a lot of ways, have to basically connect with other parts of the continent to really be truly viable and at scale. There are ways to sort of build local champions as well, but in that kind of business, the ability to enable payments sort of across the continent really is what makes you shine. And so I think it really comes down to the type of business, but broadly for us, it is extremely important to have a continental view on investing, because we think that creating sort of a best ideas portfolio across the continent is going to give us a much better shot at being able to really back some companies that can get to true scale, because that there's very few companies anyway, and so trying to focus on just one region we think is really difficult for being able to deploy any sort of reasonable amount of capital as a VC fund.
Yeah, I mean, I agree with what Walter just said. He pretty much laid it out pretty well. It's ideally, it even goes past the continental view. Ideally, you want to take a global kind of like approach on some of these companies, right? You really want them to be Pan-African and also go global and service customers that are outside of Africa. No problem. We would love that. But I think when you start evaluating these companies, the nuances that are within even one country, like for instance, if you're looking to provide a product in the east of Nigeria versus in the north of Nigeria, you have to be very careful because the culture is very different. So you have to kind of lean into the local market and the local ecosystem and really understand how these companies are positioning themselves and whether it would work there before you start spanning, kind of like taking a more 10,000 foot view and trying to see if these companies can then service a Pan-African audience or even a global audience. But definitely, I think Walter just kind of hit it right on the head. So I'll end it there for me.
Yeah. And for Michael, I mean, on the US perspective, What do you have? Do you have actual like regional preferences? Do you look at some regions, or do you have the whole nation?
Yeah, I mean, we're as a firm, we invest both in the U.S. as well as in Europe, and we've actually looked at a few companies in Africa as well. I would say, generally how we look at the U.S. is there are a few core markets like New York, Los Angeles, San Francisco, Boston, et cetera. But we think that increasingly there will be some great companies built in any different type of city, depending on like how talent aggregates. And I think specifically within Silicon Valley, talent has gotten so expensive and it's become so much less capital efficient to build companies there, both because of venture money, but also because the large platforms are hiring and scaling at a rate that we've never really seen before. And for good reason, they're like incredibly profitable, big businesses that are growing quickly, but it makes it very difficult to build teams there. That said, I do think that there is cultural dynamics even within given cities where in New York, I would say where we're based, you have VCs that are a little more business leaning, a little more metrics driven, maybe not even at seed, but at A, B, et cetera, where I think in the Valley, you have much more of a culture of going big and high growth and blitz scaling and all of those types of kind of dynamics that push companies a certain way. And so even the types of companies you build that have a good chance of being funded, it really depends on where you are. I think building a consumer social company in New York is increasingly something that a lot of people are doing because of some of the diversity of culture that is there. But I think that from a capital perspective, it still is largely West Coast or LA or other non-New York VCs that are backing those companies in New York. And so I think the dynamics of investors throughout the US is even quite different in how they look at businesses. But we invest kind of everywhere.
Awesome. I don't know where Njavwa has gone to, but he can answer when he gets back. Just continuing on. Hello.
I was gonna add a quick point to that. So in our sort of investing, we also, while we don't spend a lot of time doing this, we have made some U.S. investments in my previous life, and my partner Peter, who spent a lot of time in the hedge fund world as well as myself on Wall Street. I think. I used to live in San Francisco and did a lot of investing there in the tech ecosystem. I think Michael's point is right. It's extremely expensive to acquire talent locally in the Valley. And frankly, a lot of people are moving out of the Valley because it's so difficult. And I think that I actually think there's a pretty big opportunity in the US to back companies that are not being built in the Valley. Because I think that, valuations tend to be a lot more favorable. It's not going to be, a going out of sale discount, but ultimately you're going to find companies with much better and much more sane valuations, even as you go from San Francisco to Seattle, or you go from Seattle to New York, or you go to Austin, or some of these ecosystems. There's a pretty noticeable difference in the valuations of these companies. And also locally, you're starting to see a lot of indigenous sort of tech VC funds that are being areas. So that's another place where sort of I think the US is a bit differentiated from Africa, where you can go to Seattle, or you can go to Austin, or any of these places, and then there are very, very real VCs, or New York. There are very real VCs in each of these markets that are extremely talented, have capital, and are also backing local companies. Whereas in Africa, that is true to an extent. I think that it's a little bit sort of unequal, depending on what ecosystem you're looking at. So if you're looking at Kenya, it might be a lot more advanced. Nigeria, obviously, everybody loves Nigeria. It's their favorite, big sister or big brother. But you go to somewhere like a Senegal, and there's almost no capital. And so it's very uneven in Africa relative to somewhere like the US, where you have a lot of capital in every single ecosystem that you go to.
Mm-hmm.
Njavwa, from the same question.
Thanks, Kas. Look, I think I gave my view away, my mini intro, that Pan-Africanism and thinking about the continent broadly is a view we take at Zenga. I think if you look at the Waltz made earlier, it's the largest market cap. So 7 of the largest companies in the world are tech companies, and 5 of those are in the US. None of those companies started by saying, let's imagine Facebook. If Facebook started by saying, I'm going to only for Harvard, and that's what I'm going to stay with, I would have been very different. Their model to think about global market first. So for us, I think looking at the global is starting with the African market in terms of that number for 30 years, and looking at across that, and looking at the people in those businesses. What is the human capital investment that we as investors are making? What is the human in education systems that policymakers are making? The capital investment entrepreneurs are making in their teams, and how are they thinking about that locally? Absolutely, to understand how the local dynamics are referenced, but how does that team scale across Africa, right? Again, Apple doesn't think about products for markets that are tough to get into, but think about making a global product. And again, tacking on to the last panel, you're designing a system that should scale and work across our $2.5 trillion market. And that $2.5 trillion market today is the 11th largest economy in the world. In 30 years, if that economy grows at the same rate, that 11 is going to be $4.6 trillion UK by 1. And it will be the 4th largest economy in the world, behind the US, even necessarily in that order, and Japan, right? And so if you think about businesses that can scale into that growth, we start with a plan to regionalize. And lucky for us, each of our investees have that thought process in Musanga, Zipos, and Switch. They're thinking about what is the regional issue and what is the continental issue. And that is why I go free trade agreement, why it's so important. I commend the champions of business that are leading the way in terms of fighting for pandemic relief for Africa. Ngozi Tijani, Donald Kaberuka. What I really hope, to be honest, is that focus moves to execution and implementation of our continental free trade. Because once we unlock these borders, and once we passports, not just select said special individuals, I think we'll have limitless growth in terms of the markets. The traditional model starts kind of top down, right? What is the addressable market? And again, in Zambia, we suffer from, well, your addressable market is 1% of the economy. But if my addressable market is 4.6 trillion in 30 years, then all of a sudden you're forcing investors to take a different view than has been traditionally taken. And that investor view is, how big is my next fund going to be? The traditional model that I mentioned earlier around a percentage of management fees and a percentage of carry. It's mind-boggling that Carlyle can raise a $10 billion Asia fund in 3 weeks. And the only reason it took 3 weeks is actually raise that fund and oversubscribed in 5 days. Okay. The great thing about that is if you charge $2 asset management firm, and even if you're 10% of that as a VC, management fees for 10 years are sorted out. But in Africa, we don't have the luxury of large enough tickets, as a lot of these firms have found out. We don't have large enough tickets, and Walter was referencing this earlier, to allow for fund managers to charge that and to allow for enough investable. So if you have a large enough addressable market, which is the Africa, then all of a sudden the Model 3 I was talking about earlier, you're not thinking about just shipping the cobalt, which 2/3 of the north. You're not thinking of shipping the cobalt off to the nearest port, whether it's in Lobito in Angola or in Dar es Salaam or in Walvish Bay, to get that cobalt off to China or off to the US, buy the Tesla to then come and take a selfie when you're driving down, when you can Tesla in Malawi, in Congo, or in South Africa. I think Elon Musk might still have a second passport, but about addressing African market that started with a product or resource that was very regional. But think about the ecosystem, entrepreneurs, of developers, the human capital and if you start with that view, I think we take away a lot of the negative connotation around, well, your economy, right? Our economy is going to be $4.6 trillion and have 2-3 billion people in 3 years. And that's certainly the view we at Zenga.
No, awesome. And I think just continuing on that discussion as well, Michael and Walter were addressing the point that certain areas in America are actually becoming very expensive to actually invest in. And I think just kind of on the African perspective is there's similarities as well. If you look obviously in Lagos, you look in Nairobi and Cape Town, the seed investments that those companies are raising are much higher than in the likes of Zambia or the likes of Zimbabwe, as Walter said. But again, the general sentiment that we get, especially from foreign investors, is the coachability. So it's, yes, fine, the investments are cheaper, but do they actually have the leadership or the team to actually get it to position to scale? And ultimately, in a way, they're not wrong. But the point being is, and I think in Njavwa, you start to probably with the broader solution to it, which is the African Trade Union. But what are they like other policies that we can implement or other things that we can do to actually improve the coachability or the viability of these diverse leaders across the continent and not only in the big regions?
I'll start on that quickly, Walter, if you allow me to, because that's an important comment on the chat here that speaks to the human capital challenge. So today, US, in the UK, and in China, our African diaspora is being told in not very uncertain terms our skills are not. If we talk about the skill gap that exists in management teams, a lot of it can be addressed by a diaspora returnee program. And that diaspora returnee program can focus on technical assistance. There's no reason that a technical assistant program for African businesses has 6 figures in dollars, yet when a Nigerian or a Kenyan is leaving San Francisco and going back to Nigeria or Kenya, all of a sudden the lens changes and they say, Chidinma, we must pay you local Nigerian rate. I'm sorry, Stanford or Harvard is no different. I should get paid the same way that expat who's doing technical assistance coming from the US or from the UK is getting paid. Let's try it for 2 years. Let's get our human capital back and fill that operational and science is there. And by the way, we're being pushed out of a lot of these economies, West and East. If we get half of the diaspora back, we will of the supply of quality talent that you're referring to.
Yeah, who wants to go next?
Look, I think the way I personally actually think that comparing Africa and the US, is a tough one. We tend to look at more sort of India, Southeast Asia, those sorts of areas that have some of the same or similar challenges to Africa in terms of infrastructure and some of these other things. And I think that, for us, the most important thing as a venture capital investor is to understand what it means to actually invest as a venture capital firm on the continent, right? Are we able to simply write a check into a team and say, hey, listen, we love what you're doing, do more of it, and walk away? Or are some of these teams going to need more help? And the reality is you get both on the continent, right? And we have the dexterity, or we try to have the dexterity to be able to do both of those things. I think you're going to have amazing founders on the continent who can take the mantle and, run with it. And, you just come to terms about what they're trying to build and give them the capital, and they're off to the races. But then you're going to also have some very talented founders that may have some gaps. No company comes sort of, at perfection. Believe me, we've seen that. And so there are many areas where our firm sort of steps in with either our venture partners or advisors, et cetera, where we will, get our hands dirty and roll up our sleeves and help these companies to scale. And we've done that across a bunch of different companies. And I think, having the ability to do that as a venture firm in Africa is very, very important because, to Chidinma's point, simply investing in venture capital in Africa is not just about writing tickets, right? These companies face a myriad of issues that you frankly don't get if you're in the US or some of these other places, right? You're talking about, investing in venture capital on the continent. It's a combination of macro investing, right? You got to worry about currency fluctuations. You got to worry about interest rates, right? You got to worry about balance of payments crises and things like that, and different shocks to the ecosystem. We don't just worry about COVID. COVID happens on the African continent probably every 4 years in Nigeria, right? A COVID-like type of economic shock. And so, you've got those sorts of things, and then you have to think about sort of fundamental equity, right? How do you value a company? How do you think about the value of the company? Because like I said, a lot of these companies, the economic value, remember, is coming from traditional businesses. And then you have to also have, the ability to think like a private equity investor and think out to terminal value and see where these businesses are going to get. So the reality is it's very, very complex, but that's what makes it fun, right? That's what makes it challenging. And to the extent you're able to invest the time to unearth all of these different things, you can find amazing entrepreneurs that are building great companies. The reality is it's very, very, very early in Africa, right? We're very early in terms of technology-enabled businesses or tech startups. We have a long way to go. There's not going to be as many companies yet, to back. But I think it is incumbent upon all of the investors to make sure that we have not only valuation discipline, but also are very honest about, what companies that we feel comfortable backing and being honest with the entrepreneurs about where they stand. I think a lot of what we see are frankly crazy valuations of companies that are being built on the continent that are taking a play. This is back to my point about not liking the US comparison. Companies that are taking a playbook from sort of a US peer, but are building the company in Africa where ARPUs are like, 10 to 20% of what they are for an equivalent business in the States. And the company is being valued coming out of, some accelerator, at a crazy valuation. And you're an African investor or an Africa-focused VC investor. You're looking at this company and it's simply not investable. Because, where it is, it just doesn't make economic sense. And it's frankly bad for the entrepreneur. It's risky for the entrepreneur. And so there's a lot of nuances when it comes to backing these companies. But ultimately, I think, we want to back more companies and we want to see more diverse companies be built. And I do think there's a shitload of talent on the continent.
I agree with what Walter has said. And I also don't be mad. I think we need to put I think we need to back the talent that we have here. And a lot of what happens, this doesn't necessarily happen across all of Africa, but within Nigeria, a lot of what happens with the talent is that they go elsewhere. They go outside of Nigeria. They go to Ghana, to South Africa, to Cape Town, to Ghana, to the US, to UK to get educated because they have the means and they have the aptitude, but there's just not enough universities here to actually take them on. They don't have a seat. So instead of wasting another 2 or 3 years, they look elsewhere, they look outside, and they're obviously, if you have the money, you have the willingness to pay and the ability to pay, somebody's going to take you on. And once that happens, that's kind of how we lose some of our talent. And then when they're well educated and they're trying to come back. What Njavwa said happens is that now it's very difficult if you give me 2 offers and one undervalues me simply because my ethnic name is showing and it sounds like something you could pronounce, or it looks like something you pronounce really well, then I would go with the IBMs of the world or whoever else is offering me a much better offer and actually putting the right type of value on the education that I went to attain. So there is an opportunity here for us to actually invest in our education system. There is an opportunity here for us to train skilled workers. It doesn't even have to be because we're talking about tech, but there are other skills that's required that isn't high tech, but these are the skills that individuals need on their team to help them grow, right? You need a growth expert on your team. You need a marketing expert on your team. We're not training these individuals, and it's becoming less and less sexy in a way to not be a techie in this day and age, because it seems like at least having that tech background or that education in tech or being a coder, there's more opportunities for you than if you are, focused on marketing. So I think we really have to kind of widen the scope when it comes to what is important and which verticals of kind of like expertise do we actually put our money behind. It's important to start widening that scope, and also for us to start valuing education and making sure that we provide the right, I would say we give our people the opportunity to stay within the country and to get a good education within the country, and let's put value on that education. So I think there's a ton of room for them.
Michael?
This is not an area of expertise for me. I'm not going to try and speak on it.
Okay.
The only thing I will say, though, that I'd also be curious, the panel's thoughts on too, is one of the things I think we're seeing more and more in the less mature tech hubs in the U.S. is this idea of how operator angels are actually willing to take risks and work with companies in a more hands-on way, both from a financial sense and an advisory sense. And these ecosystems from earlier either large tech employees that move away and have some capital expertise, et cetera, to do that, or from startup founders who exit. Like, I think that's something that has been a key, a key factor in some of the spreading outside of Silicon Valley only. And like how that is manifesting itself in Africa, I think is, if at all, is something that would be at least interesting to me as I think about just from a principal's perspective in the US of how some founders that have gaps, as Walter said, kind of navigate those gaps, both in terms of just having enough money to, be able to start a company, and then secondarily, and having the people that believe in them, and secondarily being able to develop those gaps enough that institutional investors like yourselves and are willing to write a more material check to allow them to kind of step function up into next stage of their company.
Yeah, no, absolutely. And I think just kind of alluding to that point, I mean, at Amana Capital, that's our fundamental purpose, right? Because I do feel a lot of African entrepreneurs are overlooked. And majority of the time is because they don't really have the sweet spots, or like they don't really understand the lingo of the VCs that they're trying to target, or they're probably trying to raise the wrong amount, or they're going to the wrong fund sizes. So we kind of take a hands-on approach over a half a year period and just really put those fundamentals in place, and then bring some VCs to the table. And we've just seen the track record just increase dramatically. But just coming into, I think, to talk about the over side of things as well. I mean, even America, the lack of diverse founders, right? I think last year alone, without the $100 billion that was raised in the market, only 2% went into minority groups and also females. So I think the last question for today is: do you think there's a trickle-down effect of that kind of environment in the Western world into Africa as well? And do you think some people are overlooked because they don't really have the same lingo as some of the VC general partners that they're trying to target?
I can't speak for other firms. I can obviously only speak for us. I think for me, I mean, the whole reason why I decided to do what I do was to really play a sort of active role in the African story, specifically as it relates to technology. And for us, when we fund companies, one of the things we care a lot about is that we're backing local founders. I mean, and the data will tell you, if you go back and you look at China, you look at India, you look at a lot of these emerging markets, and you look at who was funded, by and large, a lot of the folks that went on to be really successful were local founders, right? Now, that doesn't mean that there weren't people who were not, quote unquote, local that went on to be successful. But the reality is, being local and having the vernacular and understanding the culture and having the local sort of understanding of the nuances of how people interact with product and services is a huge advantage when you're building companies. And so for us, we care a lot about sort of that localized nature. We care more about it existing in the management team than it being sort of a through and through local person. Ultimately, our portfolio is biased towards investing in local founders just because we find that a lot of those folks do have that. But I do think it's important to really put capital to those local founders, especially since a lot of the capital in the ecosystem, frankly, comes from outside of Africa. And the one thing that's near and dear to my heart is funding women to build companies in the ecosystem, because I think there is a huge opportunity on the continent for awesome companies to be built, serving 50% of the population, and we are not anywhere near being able to sort of really scratch the surface of funding great female entrepreneurs. And so, that's something that for me, I think is really, really, really important. We have, we've obviously backed companies in our portfolio run by female founders, and it's something that we want to do more and more of. And so I think the combination of local founder, female founder, like all these things are things that we think about actively, and we want to make sure that we're doing. But for us, we really want to make sure that local nuance is represented on the management team. I don't know if that answers your question, but that's sort of our perspective.
Njavwa, you were going to say something?
I was, but Chidinma, go first on this important topic. Please, Chidinma.
Yeah.
So yeah, it's probably one of the biggest things I focus on as a partner in Microtraction is really trying to find female entrepreneurs specifically, and really pushing them and trying to invest in them and support them, because so the way that Microtraction is structured, I think it's interesting to kind of talk about that. We're an open application kind of like process. You can go on our website and you just apply. And just based off of that alone, we see about 1,000 or so applications per year. And I will tell you that about 5 to 10% of those people have female founders there, right? So off the bat, it's very difficult. Like a lot of what I do is actually thinking about how do we kind of fix this? How do we find these female founders? What are some of the strategies that we can use in order to kind of ensure that females feel that they have what I would say a safe space to come and compete on an equal level? Because there's research that shows, right, that females, when they know that they're competing against males, they off the bat won't apply. So if you do a female-only application, you will now see that the number of females that apply is way higher than if it was a female and male application. So there is some sort of psychology there that helps. Like when you feel like you're on equal footing, you tend to kind of put your foot forward, but when you feel like you're not, it seems to be difficult. So yes, there is that dynamic going on, and then the other dynamic is also the dynamic. And I'll wrap it up because I know we don't have that much time. But the other dynamic is also the dynamic of sitting across the table from somebody that really understands your point of view and kind of sees life the way that you do. There's not a lot of female investors. I mean, you can look at this panel, right? We have 1 in 5 on this panel. And there just isn't a ton of female investors in general across both Africa and the US. And there's just not enough within this ecosystem as a whole, in Africa as a whole. So it's also about trying to spur that and fix that, so that when you're speaking to somebody, you can at least say that you're speaking to somebody that sees versus not. And I think it's just a different way of looking at businesses. We have a different way of looking at businesses than males do, and we see a value that oftentimes my male counterparts will be difficult for them to see. So yes, that is a dynamic that's going on, and it's something that we're trying to see if we can fix.
Cool.
So
Michael,
so Chidinma.
Oh, sorry, Njavwa. Sorry. No, sorry, Njavwa.
Michael should go.
I think Kas was about to start speaking. Go ahead.
So, yeah. We've tried. So Michael, over to you, and I'll come in after you.
All right. Yeah. My main view on a lot of this, to answer your the core point initial question, is yes, it unfortunately does matter just to have that level of familiarity with talking the talk, walking the walk, doing these types of things that aren't accessible or taught in a lot of networks and a lot of people. And I think that it's funny when you compare and contrast, even at least in the US, venture fund fundraising is all about you build these long relationships with your LPs over time. They get to know you over months and they talk to you and they iterate on your model with you as they're making a decision to invest. In venture, again, from a US point of view, it's, hi, nice to meet you. Let me get your deck. Let me get the best version of your pitch in the next, 10 days. And then you have 4 to 7 to 10 days to make a decision to invest and become married for the next 10 years, for lack of a better word. And I think that instead, it's about how do you make sure that you're being able to and willing to, if people come from different backgrounds or they have different points of view as you, actually take time to understand that point of view and also potentially coach them with dealing with the other unfortunate side and the reality of the world of there probably are some things that these people are going to have to learn in terms of how pitching style, metrics to communicate, story to tell, et cetera, in order to raise follow-on capital. And I think it's really just on the investors to make sure that they're taking the time to not just have a lens of, I want to find in our world, Stanford CS person who knows exactly how to optimize a fundraise for $2 million within 2 weeks, et cetera. And instead just realize that there are humans that come from different places that have great ideas and can build massive companies, but maybe they just don't have the exact vernacular that we're all trained to look for. Anyways, the long story short is spend time.
Yeah, no, absolutely. Guys, I think we're at the end of the discussion. It's been unbelievable. It's been a pleasure to kind of pick your brains, and hopefully this is just the start of continuing the conversation going forward. Chris, I think you wanted to say some final points before.
Yeah, so I just wanted to thank the panelists, thank everybody for attending and watching these sessions. So this is the last session of the day. Thank you everybody for supporting the African Renaissance Conference. We will be back tomorrow starting at 2 p.m. GMT with our first kickoff session, which is Art and Cosmopolitanism, which will be moderated by Mulwanda. So thank you again, everybody. It's been an awesome experience kind of watching this and watching all of the panelists throughout all the sessions, everything from modern medicine to cities as platforms for transformation, and also getting insights into early stage investing and the differences in Africa and the US. So we encourage you guys to tweet, post, share the link, get more people tomorrow. We had amazing viewership from all over the world, and we want to continue that momentum going into tomorrow. So thanks again, and see you tomorrow starting at 2 p.m. GMT.
Thank you.
Great stuff.
Thanks, guys.
We'll keep in touch, I'm sure.
Sure. See you.